and I welcome you again to an IUGO webinar where we're going to talk about our self-employment taxes today. To introduce myself, my name is Jennifer Procell. I'm the Chief Product Officer and Vice President of Tax and Accounting here at IUGO, where we make taxes ridiculously simple. And each webinar that we're going to do, and I'm going to really emphasize how simple taxes really can be to remove any doubts and fears that you may have when you're filing your own taxes. Today, we're going to be discussing filing your self-employment taxes. If you do not have self-employment income, you're welcome to stay, but I invite you to check out our other webinar where we're talking about basic tax filing, and we go through the whole tax filing process. Today, we're really going to be focused on self-employment income, how to file those taxes, how to enter in all of your expenses so you can maximize your deductions, and know that you can file your self-employment taxes without fear of the big bad IRS coming to get you because you didn't file correctly. You know, we get lots of questions about, why do we think that people are so hesitant to file their own taxes? And honestly, the main thing that I hear is it's just fear. People are worried that they're going to enter in the wrong information, or they're going to enter in, or they're going to miss a big deduction. And especially with self-employment taxes, because there's so many items that you can deduct. So self-employed individuals are typically worried that they're not claiming all of the right deductions, or they're claiming too many and they're going to get audited and they're going to get in trouble. So I'm hoping that we'll go through this webinar and I will be able to alleviate those fears that you have and give you tools that you can feel secure and confident in filing your own self-employment taxes. Although I love talking about taxes, I know it's not the most interesting subject to most people, but I will try to make it as interesting as I can, and really be focused on things that matter to you as a self-employed individual. So to make things simple, we're going to use the IUGO Do-It-Yourself software. You can use our software to file your self-employment taxes as easily as you can to file your regular income taxes. So I'm going to get started, and we're just going to go through this step by step so that you can know how to file your taxes and kind of see where we're going to go with this, and how you can get from A to Z with little headache. So let's go ahead and get started. So I'm going to go ahead and sign up. So I'm going to be a new user as I'm showing you this process. So bear with me as I get all of my information. So with any software, you want to make sure that it is secure and you are able to have two-factor authentication set up a strong password, so that with all this sensitive information, you're not at risk of someone taking that from you. So I'm just going to enter my code so that the system knows that I am who I say I am, and it can verify me when I log in at a later time. As with any tax filing, the first thing that you're going to want to do is gather all of your information. That's probably the longest part of filing your taxes, is getting everything that's necessary to complete your return in one sitting. You can always start it and come back, but the first thing that I always suggest that you do is have everything ready to go. Again, we're really going to be focused on self-employment taxes. We're not going to talk a lot about other types of income or credits. So again, we did discuss these in great detail in our previous webinar, which is still available, that you can go check out. Also, we do like to hear from our viewers, so please feel free to drop us a comment. Let us know, what brought you here today, what your concern is about self-employment taxes, what you would like to learn about. So we will definitely be checking those out, and we can perhaps have other webinars related to more topics that interest you. So we're going to gather our documents. So this includes all of your tax forms and all of your personal information. You need to know birth dates, Social Security numbers, and you need your income forms. So income forms are going to be the documents that you get from employers or from anyone who has basically paid you money. As a self-employed individual, you probably have received a 1099 NEC, which is for non-employment compensation. You may have received other documents such as a 1099-K. And we'll talk about that in more detail when we get into the self-employment reporting. But any other documents that you may have that you received income, so that could be a W-2 from an employer, interest income, you can have a 1099 INT for that. So any of those documents that you've received that you have made money from, make sure you have those together. Any other documents that you may have, gather those that could have to do with credits or adjustments, deductions. Those would be for maybe student loan interest or mortgage payments. So have all those tax documents in one spot. And also make sure you have birth dates, social security numbers of everyone that's going to be on your return. Since we have all of that together, we're going to get started, and it's going to be right here in the About You section. The main thing about filing your taxes is it's mostly data entry. So this information is information that you're already going to have. If you come across something that you're not aware of, then it probably doesn't apply to you, and you can say that it doesn't apply to you, and I'll show you a couple of examples here. So this is for Susie Samples, who is an interior decorator. Ooh, okay. Put an address here. So I'm just entering my information, making sure that I have it incorrectly. Make sure your name is spelled correctly, your social is entered incorrectly, date of birth. These are the things that will reject if it doesn't match the IRS system. I'm going to see if I have any special tax filing considerations. I was not a student. I'm not blind or disabled. I'm not a member of the armed forces. No one else can claim me as a dependent. I am not passed away, and I'm not affected by a federally declared disaster, so I can just select none of the above, and done. I've finished my information. So for this example that I'm going to show you today, we will say that I am married, so I can kind of show you how self-employed and employer income kind of works together. So for our purposes, I will say that I'm married and want to file this return with my spouse. And then I have one more question to answer. Did you or your spouse take the first home buyer credit in 2008? Again, if something does not make sense to you, it does not ring a bell, it probably does not apply to you. So I guarantee if you were making repayments on this credit, you would know about it. So if you are not certain what the question is asking about, you can pretty much assume it doesn't apply to you. Now I'm going to add my spouse's information. Okay, and he does not have any special situations that apply to him, so I'll select none of the above, and then I can save. And now my living situation, my spouse information is saved, so I can move on. I'm going to go through these fairly quickly. Again, we talked about these in more detail in our last webinar. So do I have any dependents? For our purposes, for self-employment, I'm going to select no. We're not going to get into the dependent questions this webinar because that can take up a lot of time. So I will select no for that. And I'm done with the About You section. I just need to check my summary, make sure everything looks good, and everything looks accurate. Again, you want to make sure these are some of the main rejections we get is because something is misspelled or typo. So just do a double check, make sure that everything is entered in correctly. All right, so now we're going to get into adding income. And so again, we want to gather our documents, make sure we have everything together, and we're going to add our income. First thing we're going to do is select which income we're reporting. So for our example, we'll have wages for my husband and a W-2, and then we'll have self-employment income for myself. I'm not going to mark that we have any other income in here, but if we did have interest or government, unemployment, dividend income, or maybe I'm a partner or a shareholder and I received a K-1, then I could enter that in here as well. But for today, we're going to do wages and self-employment income, which is reported on a Schedule C. So we'll talk about self-employment income in more detail here in just a moment. But the first thing I'm going to do is enter the W-2. W-2 is very easy. You get the form from your employer, and you just need to match what the employer sends you to what you're entering. Again, it's just data entry. You don't have to think about it. You just have to copy and paste it over. This one is for my husband, so I'll make sure that it's set for him. It already has the address on here. Make sure this date is in there. And so here I will just enter the information as it's on the W-2 form. These match the boxes on the form. So you just have to go and copy that over. And then we need to just enter the income information. So this W-2 had $65,000. Taxes withheld were $6,800 of federal income tax. Social Security wages and Medicare wages are the same as the box 1. So these amounts were already calculated and they match my W-2. I don't have anything here in my box 12 or any of the other boxes. So that's it. I will select next. And because this is a Texas W-2 and there's no state tax in Texas, I don't have any state information to add. So that's it. W-2 is done. I just took the information from the W-2 and I put it in the system. You can see here that I already have a federal refund. If you look in the upper left-hand corner, we're already calculating what that refund or tax owed looks like. So for this particular case with married couple, one W-2 income, that comes to a refund of $2,517. Now, as I add income, that number will increase or decrease. So as you add income and adjustments, deductions, this number up here is going to adjust based on the information entered. Okay, so now we're to the self-employment income, sole proprietor. This is what we're here for. So this is where we're going to be spending the majority of our time. Let's talk first about who has self-employment income. You may not even be certain if you do have self-employment income or how you're supposed to report certain income that you've received. So if you're earning income and you are not working for an employer, more than likely you need to be filing a self-employment return. And if you're doing gig work, so maybe you're doing DoorDash or Uber driving, or maybe you're working projects through Fiverr or Upwork, you are probably a contractor and are going to receive a 1099 NEC. Now, if someone paid you less than $600, you may not receive that 1099 NEC, but you still have to report that income. So that's important to know. If you're earning money, even if it's not through an employer, you need to report that income. Of course, if you are a sole proprietor, you're running your own business, you probably already know that you're self-employed, and this is not a question for you as to whether or not you need to be reporting here as a self-employed individual. But for the most part, if you are earning income and you are not employed, or you're earning income from someone who's not an employer, you'll need to report that income on the self-employment Schedule C. So I'm going to go ahead and get started. And we're going to start by adding our information. Now, you need to have, this is your business or, your side work. So this information should be information that you do have. So we're going to go through this and I will show you things to consider as you're going through your Schedule C information. So the first part, we just need to enter our business information, and I have it set for me. This is for me, not for my husband. It already pulls in my information. The next question is, this business is an LLC, so that's limited liability company. So this is a business status that you have to elect. It's you register through the state to get your LLC. If you have not done that, if you have not gone through the steps of becoming an LLC, then you are not an LLC. So if you have, then you know that you are, and you will have an employee identification number and a business name. If you have not gone through those steps, then it's just listed under your name and your social security number. Having an LLC is good if you're in business, you're a sole proprietor. It just kind of helps add a layer of protection between your individual self and your business. For our purposes, we are not an LLC. I'm just a sole proprietor doing my own thing on the side. This next part here is asking about principal business or professional category. So this is, don't stress yourself out. Don't give yourself anxiety. This does not affect your return in any way. This is just how the IRS is collecting data to understand the different industries that people are working in. For ours, I said that I am an interior designer, so I will search up design. And I can see here that I have specialized design services. So if I select that, then I need to select the activity. So first I select my category, which is specialized design services, or at least I think it is. I'm going to keep looking to make sure that that's the one that I need. And right here it says specialized design services, including interior, industrial, graphic, and fashion. So that is my business activity code there, 541400. If I couldn't find it, it's not a big deal. I can put unknown and then select that it's unclassified, and that's okay. So don't let this step cause you anxiety. It's not going to come back at you, but if you can find your business activity, then by all means, enter that in. Like many self-employed individuals, my business address is the same as my home address. I don't rent someplace else out, so I can just select that and I can move on. So now we're going to talk about the business side of my business information. Wants to know what my accounting method is, and I have the option to select cash, accrual, or other. If you are a self-employed individual, especially if you're gig work, most of you are going to be using a cash method of accounting. This means that money you have come in gets counted as income. Money that you spend gets counted as an expense at the time that you spend it. Cash in, cash out is your cash method of accounting. And for the majority of self-employed individuals, sole proprietors, this is your method of accounting. Accrual is a little more involved. And if you do use accrual basis, I do suggest that you maybe speak to a tax professional or accounting department. We have both at IUGO, so we're always eager and willing to help small businesses, self-employed individuals understand their right accounting method. But accrual is a little bit more complicated, or you can even have a combination of the two. So for our purposes, we're going to do this like the majority of self-employed individuals and have a cash in, cash out accounting method. So did I start my business in 2022? I will select yes. I started it January 1st, 2022. And then I have this question here of, did I pay a contractor $600 or more to do work for your business? And this is important because, as I mentioned earlier, when you're gathering your own documents, if you pay a contractor, you pay somebody $600 or more to do work for your business, you are required to issue them a 1099 NEC and file that with the IRS. So if you did have a contractor and you paid them $600 or more and you have not done that, then you need to get that done ASAP, as that deadline is January 31st. So better late than never. Go ahead and get that out when you, if you realize that that is something that you need to get done. So you need to make sure that you are issuing these, because having contractor expenses can sometimes be really large. You want to make sure you can deduct all of your deductible expenses. So for our purposes, we did pay contractors $600 or more. And I'm going to be asked if I did or will I file the required 1099 forms. And I will select yes, because I'm aware that I need to file those to my contractors, and that has already been done. So that's it on the business. And now we get to move to the income tab of our self-employment business. Now, let's talk a little bit about income and what constitutes income and what you need to report when you are in business for yourself. Again, if someone has paid you $600 or more, then they should be issuing you a 1099 NEC. If they don't issue you that, does that mean you don't have to report that income? Absolutely not. It is still on you to report that income. It could be that they were behind and they were late, and you may get that 1099 later. So you want to make sure that you are just on top of it and you're reporting all of the income that you received within the year for your business. If you're just working for one, if you're just doing DoorDash or something like that, they give it to you in a nice little form, and it tells you, how much you made and what your gas, what your mileage was, and that makes it real easy. But if you have several different clients and you're getting income from different sources, you want to make sure that you're tracking that so that you can accurately report it, and just make sure that you don't get in the you don't start thinking that just because it's not reported on a form that you do not have to report it on your taxes. So if you earned it, you were paid it, you need to report it on your taxes. And this is where we're going to do that. So if you are in business for yourself, when I say collect your documentation, it is good to take some time and make sure you have a list of the income that you've brought in and the expenses that you've paid out during the year. If you've been keeping up with this throughout the year, then that is great. And you probably have a spreadsheet, and I'm going to show you my spreadsheet. Probably looks something a little like this, where you are tracking how much income you've had come in. Maybe you have a product and you have, how much you've paid for your product, and then your regular expenses listed here. So if you don't have this and you have multiples, avenues of getting revenue, and you're having these expenses, I advise you to stop completing your return and get this prepared. There's software out there. We have a book software that can help you do this fairly easily. Or you can even go to a tax professional who can help you do a books cleanup. And that's also a service that we have. But if you have this together when you are sitting down to do your taxes, this is going to make things so much easier. And it's, again, going to be about plugging information in. So I'm going to start here. I can see in my spreadsheet of what I've brought in of my profit and loss that I have $25,000 in sales revenue. So I also received a 1099 from one of from someone that paid me. So the first thing I'm going to do is add my 1099 NEC. So I'm going to add that in here. I'm just going to enter the information that they gave me. So again, this is just filling the information out from the form that you received. You don't have to think about it. You don't have to try and understand. You just match the box numbers to the numbers here on the form. So in this scenario, I received $10,000 in non-employee compensation that was reported to me on this form. There's no federal tax withheld, which is typical. And I'm in Texas, so I had no state tax withheld or state income. So that's it on my 1099 NEC. 1099K, this is going to be when you are paid through credit card, you use Square, maybe you have PayPal, Venmo. When you use a third-party transaction or payment card, they're going to issue you a 1099K if they paid you a certain amount of money. So if you, now this was a big deal. It was going to be set at $600. If you received $600 through Venmo, Cash App, PayPal, you were going to receive a 1099K, and that caused a lot of confusion and concern. However, that was postponed, and now it is back, it's reverted back to its original number, which is $20,000. So it's very possible, even if you did have transactions through any of those third-party apps, you will not receive a 1099K this year. Next year could be a different story, as it's supposed to go back to that $600. So keep an eye on those transactions. Make sure that you're keeping your business and personal separate. You don't want to get a 1099K for, money that you're sending over to your mom for dinner or something, right? So this is just for your business transactions that you're needing to report here. For our purposes, we did not have any 1099K received to us. I'm going to leave that blank. So this is my cash. So this is income that I've earned that is not reported on one of these forms. So I know that I have $25,000 in sales revenue, and I've already reported $10,000 of that. So for my cash, I have $15,000 that I need to report so that I have my total of $25,000. Now, if you have, let's say I had $30,000 reported to me on the 1099 NEC, but I only had $25,000 on my profit and loss report that I created, then I have a problem because more income was reported to me than what I was showing. I need to go back and make sure that my books are accurate, because you need to make sure that you're reporting all income received. So returns and allowances. So this is if you have money, this is if you have to return an item, maybe someone purchased something from you and you have to return it and issue a refund. This is where you're going to put that so you can not count that towards your taxable income. And then if you have other income related to your business, awards, interest, scrap sales, you're going to enter that here in other income. So for example, if you have a business checking account or business savings, and you're earning interest on that business account and you receive a 1099 INT for your business, then you would enter that interest here instead of your personal income, because this is actually applied to your business income. But for us, I will check here. I only have the $25,000. I don't have any return of sales. So I've finished this and I'm ready to go. So that's it on my income. So now for inventory, it's going to ask if I had inventory. So if you're selling a product, you probably have inventory. You need to make sure that you are keeping track of how much you had at the beginning of the year and how much you had at the end of the year, and how much it costs you to keep yourself supplied in that inventory, because that is going to be what's called your cost of goods sold. So I'm going to select yes, because I'm an interior designer and I have products that I do sell to my clients. So it's going to ask me what my inventory at the beginning of 2022 was. So this is how much in dollar amount I had in inventory at the beginning of the year. So for our purposes, I'll say I had $2,000 worth of inventory at the beginning of the year. And then at the end of the year, we'll show here that I had $1,500 of inventory at the end of 2022. So I actually had less inventory than I did at the beginning. It's going to ask me what my method was to value my inventory. So do I value it at cost? So whatever I paid for my inventory is what I value it at. That's cost. Or you could use the lower of the cost you paid for it, or the market value. So maybe the market value is less than what you paid for it and you want to use that. Or there's a mixture of the two. So if you're not sure, this could also be something that you speak to a professional about if you're not sure the best way to value your inventory. For our purposes, I will have this set at the cost method. And again, I'm just answering questions here. Was there any change in determining my quantities, cost, valuations between opening and closing inventory? And I'll say no. It also wants to know how much I paid for items. So again, I'm going to go look at my spreadsheet, and I had purchases of $8,000, and that's for my cost of goods sold. So I spent $8,000 for items in my inventory. If any of that I kept for myself, then I would have to reduce that amount by any items I kept for myself, because I don't get to deduct that. It asked if I had any cost of labor. not including amounts that I paid to myself, and I did not. Did I have any materials and supplies? I did not have any materials and supplies to for my inventory or other costs. I just had this purchases. So if you look here, I have it listed on my spreadsheet. I didn't have any other. So that's it. I'm done with my inventory and my cost of goods sold. So now we're going to talk about expenses. So first thing we want to do is we want to talk about what are deductions, what can you take, and what do you need to take these deductions. So as a business, you're able to deduct expenses that are required for the operation of your business. So, and it needs to be ordinary and necessary, right? So if you are an interior designer, but you are taking flight lessons, those flight lessons are not necessary, reasonable expense for my business. I cannot take that. I cannot claim that as a business expense. However, anything that's related to my business, money that I'm investing into my business by advertising or by contract labor, commissions, anything I need for the running of my business is 100% deductible. There are a few exceptions and we'll talk about those, but for the most part, these are 100% deductible expenses. If you are not tracking these throughout the year, I definitely recommend that you start doing so. There's a lot of applications out there that make it very simple to do so. We have one. If it starts getting really out of your hands and you feel like it's very time consuming, there's always professional accounting help that can help you with this. And that's also a service that we do provide. But for most people, I think that they're able to have a spreadsheet and keep pretty good track of these items. So in my spreadsheet, I do have expenses that I've been tracking throughout the year. So what I'm going to do is I'm going to start plugging that information into my Schedule C. Okay, so I'm just going to start at the top because I want to make sure I don't miss anything. So this is for repairs and maintenance. Obviously, it needs to be related to my business, not to something that's not related to business expenses. Next is advertising. I had $850. I'm going to plug that information in there. Accounting is a deductible expense. So that goes under professional. If you're not sure where it should go, you can always put it under other. How much was it? That was $650. So your accounting fees, legal services are all deductible. I have bank fees of $120. So let's see, I have some fees here. So bank fees, that is the fees for your bank. Even if you have NSF fees, those are also deductible if it's in your business account. So any bank fees are deductible expenses. Contractor payments, I have $4,500. So I'm going to enter that. Now, again, I had paid a contractor $600 or more for services. So I need to make sure before I'm entering this number in my deductions that I have done the necessary work and issued that 1099 NEC to any contractor that I paid $600 or more. Insurance. So this is not health insurance, but this can be business insurance. We'll talk about auto insurance in a little bit, but this is not auto insurance either here that I'm entering. So this would just be my business insurance. Legal and professional fees. I'm going to actually add this with my accounting, which is $27.50. I'm going to update that. So it's okay that we have things grouped together. The important thing is if the IRS were to say, what are these legal and professional services, that you're able to go back and say, here's what I paid, here's who I paid. So everything that we're entering here in our expenses, you need to have documentation to back it up. Make sure you have the receipt, who you paid, when you paid it. These are all from this tax year. So I'm not deducting expenses in 2021. I'm not deducting expenses that, occurred in 2023. These are my 2022 expenses. I have the documentation showing that I paid this. It is very good for you to have a business account. If you don't have a business account and you are a sole proprietor, You're self-employed. That should be the first thing. Your first 2023 goal is get that business account, and this will make this much easier. And you can definitely see what was business and not get it mixed in with personal. So make sure whatever you're claiming here, you have the receipts to back it up. It doesn't have to be paper receipts. You can keep a digital file, however you want to keep it, but you need to be able to provide that information if the IRS were to come back and ask for it. Okay, so where were we? All right, so we have postage. So any of my postage, my fees, I get to deduct that. So I'm going to enter that information in. Professional dues and subscriptions. So I'm going to look here, and when I look at these items, I'm not seeing professional dues and subscriptions. So I want to make sure that I'm claiming all my allowed deductions. So I'm going to highlight this so I remember to come back to it. So professional dues subscriptions can be any type of maybe membership that you're part of that you're paying that's related to your business. Telephone, I will look here for my telephone, and I also don't have my phone in here, so I'm going to highlight that, and we'll talk about this a little bit more when we enter it. Meals, we're going to talk about this a little bit more because that's on a separate tab. And then we have travel for $650. So right here, my travel, now this is my business travel. This is not personal travel. So make sure when you are deducting your travel expenses, this is only for business. If you mix business with pleasure, that's fine. Just do not include your personal activities, your personal travel expenses with your business travel expenses. So, have that detailed out so that you are making sure that you're deducting the correct amount. So I've gone through my spreadsheet. These are all of my expenses. I've highlighted the ones that I haven't entered in yet so I can come back to it. So so now I have a subtotal of expenses of $9,370. It asked me if I have deductible meals, and I do. Do I have car and truck expenses? So I'm an interior designer and I'm going to clients' homes and model homes. So the answer to that is yes. Do I have home office expenses? Well, we identified at the beginning that my work address, my business address is my home address. So yes, I do have home office expenses. And then do I have other expenses that are not listed here? Well, I do know that I have some items highlighted that don't belong in either of those categories. So I'm going to select yes for my other expenses, and we're going to take you through these. Okay, so let's go to deductible meals and entertainment. So entertainment, take that off. Entertainment is very rarely a deductible expense. There's a lot of things that would have to be in place, but unfortunately, taking your client out or, taking employees out sometimes is not, as entertainment is not a deductible expense. It would have to be a fully employee-related event for it to be deductible, but there's a lot that goes into that. So if you're taking your clients out, you can assume that it is not deductible as entertainment. Now, if you do take your clients out and you also maybe you go to a game and you also have that catered, just make sure you have your receipt separated between your catering bill and your entertainment bill so that you can deduct that catering amount, the food amount, which is deductible. So in here, I have that I had $1,800 in meal expenses. So I'm going to enter that here. This question right here, are all meals purchased from a restaurant? Well, in order, like many things with the pandemic, there have been incentives in the form of tax credits or deductions to help with offset, issues coming from the pandemic. And one of those was to help revitalize the restaurant industry. To help do that, they increased the deduction for meals purchased at a restaurant from 50% to 100%. So this is great if you have a lot of meal expenses for your business. If you're purchasing them at a restaurant, you can select yes, and you can get the full 100% deduction. You don't have to eat them at a restaurant. You just have to purchase them at a restaurant. Does not count if you're purchasing food at a grocery store. Those are not 100% deductible. Kiosk or vending machine, those are not 100% deductible. This is from a restaurant. If it was broken down and you had some at a restaurant and some not, you just have to identify how many were from a restaurant. How much of that 1,800 was from a restaurant, and then it's going to do the math for you. But for our purposes, we're going to say that yes, all of our meals are purchased from a restaurant, and we're going to go to the next one. So let's talk a little bit about car and truck expenses. So there are a couple ways that you can deduct your vehicle expenses. But if you are a self-employed individual, sole proprietor, for many people, the easiest way is the best way, and that is to use the standard mileage rate. So I'm going to show you what that looks like here. So I'm going to put what the vehicle description is, and this is the vehicle that I'm using for business. It's going to ask when I put it in service for my business. So when did I start using this vehicle for business? So I started using it when I started my business on January 1st. Now, we have this question here broken into two parts. How many business miles did I drive the first part of the year, and how many business miles did I drive the second part of the year? This is another COVID pandemic incentive. Now, anyone who was driving in the summer of 2022 knows that gas prices were very, very high, and it was causing a lot of hardship, especially to self-employed individuals who did a lot of driving for their business. So in order to help offset that and to provide some relief, they increased the standard mileage rate, which is great. However, it only took effect in July. So from January through June of 2022, your standard mileage rate is 58.5 cents per business mile. From July through December of 2022, your standard mileage rate is 62.5 cents per mile. So it increased 4 cents per mile on your standard mileage rate. So for 2022, it is broken up like this so that you can claim the right amount. So you do need to know how many business miles were driven the first part of the year and the second part of the year. Now, when we talk about business miles, let's talk about this a little bit so there's no confusion. And this is something that causes a lot of confusion, or we get a lot of questions about. So a business mile is when you're driving from a workplace to a workplace. When you drive from your home to a workplace, that is not considered a business mile. That's considered commuting miles. But once you get to that workplace, if you then drive to another workplace or maybe to a warehouse or some place related to business, that is considered business mileage. So those are the miles that you want to track. So from home to work is not, from work to home is not a business miles, but everything in between is. So for our purposes, we will say that we drove, we had 1,400 miles the first part of the year, and then 2,400 miles the second part of the year. Maybe I was driving more because I found out that there was a higher standard mileage deduction. Entering in your commuting miles, you do not get a deduction for commuting miles. However, this is good in determining sometimes the percentage of time you use your vehicle for business. It goes off of total miles and then how much of that was for business. But for our purposes, I'm using the standard mileage rate, so I'm not going to worry about these because I'm not going to get an extra deduction for my commuting miles or any other type of miles. So when you claim the standard mileage deduction, that is including everything related to the upkeep of your vehicle. So repairs, maintenance, that's all included. Gas. You don't have to worry about keeping all of your gas receipts. You don't have to worry about all the receipts for the tires and oil changes and any other type of repairs. And you don't have to worry about what percentage of that was business versus what percentage of that was for personal, because you've done the standard mileage and it just simplifies that for you. What's not included in the standard mileage is parking fees and tolls. So there is a place where we can add how many I paid for parking fees and tolls. And then any state and property taxes is also not included in that standard mileage rate. But you'll see we're not asking for, how much did you spend in gas and how much did you spend in the different cost of your vehicle. So just with the standard mileage and my parking fees, you can see I have a total deduction for my car of $2,469. So this is a good option for me. So I'm going to continue here. I have to answer some questions. Was my vehicle available for personal use during off-duty hours? Yes. And that does not stop me from claiming this deduction. Do I have another vehicle available for personal use? I'll select yes, but again, it does not affect if you can claim this. Does my vehicle weigh more than 600 pounds? And then do I have evidence to support my deduction? The answer needs to be yes if you're claiming this. And is the evidence written? You need to have this documented somewhere so that you can claim your standard mileage deduction. And you are not limited to one vehicle. If you have more than one, then you can add another vehicle here. So that's it for the standard mileage. So now we're going to move on to home office expenses. And we get a lot of questions about what can be deducted for my home office. If you are filing on a Schedule C and you work from home, chances are you have a home office deduction. So what constitutes a home office? You have to have a space in your home that you're using exclusively for business. And this can be your work area. It can also be if you're storing items at home, it's the storage just for business items. That can also be a work area that you can deduct as your home office expense. Now, this area needs to be used exclusively for business. I say that again because it's very important. If you are doing 90% of your work at the kitchen table at your home, unfortunately, that is not a home office, and you cannot claim that because you cannot support that nothing else goes on at the kitchen table other than your work. So if you work from home, dedicate an area, carve out a small space for yourself that's not a regular family area so that you can claim that space for yourself. So for me, I will say that I have 120 square feet in my home that I use for business. My home is 1,900 square feet, and I'm going to do the simplified method. And I'm going to stop a little bit and talk about this. Just like the standard mileage for your car, the IRS also makes it simple for the home office deduction. So if you were to do actual expenses, you would have to take all of the expenses in your home and grab the percentage that's specifically related to your business. But instead of doing all of that, the IRS will allow you to claim $5 per square feet for home office using a simplified method up to 300 square feet of your home office. So if you're using more than 300 square feet, you are forced to do actual expenses. But if it's less than that, then you can do the simplified method and not worry about having the receipts for everything that you've used in your home for utilities and everything else. You can just include that in the simplified method of $5 per square feet. So that's a pretty good deduction. It's going to ask me when I first started using this area for business. So I will say when my business started on January 1st of 2022. As part of my home use as a daycare, it was not. So I'll select no, and then I'm ready to move on. So now we're here on our other expenses. So let's see what I've cleared out. So I was able to do my meals. So I'm going to unhighlight that because I put my meals in, if you remember. So now I have professional dues and telephone. So I will all you have to do is type it in. I have my professional dues and subscriptions. You don't have to it does not have to be itemized. You just have to be able to show the itemized list if you were ever asked what that amount was for. So that was $180. And then I have my cell phone. Now, cell phone, internet are oftentimes expenses that self-employed individuals forget to include. It just needs to make sure that it's the percentage used for your business. And we've talked about that throughout. You can only claim the business portion. So if you have a cell phone that you pay for $750 a month, 80% of that is used for business, then I actually get to deduct, or not $750 a month, sorry, $750 a year. Then I would get to deduct $600 on my telephone. If that was per month, then I would get to multiply that times 12. But for this would be a $600 deduction, and that's just the business portion. So I can put business phone, 600. So just make sure the only lesson there is do not include personal expenses on your business deductions. So I have entered my professional dues. I can unhighlight that. I've entered my telephone. I can unhighlight that. And that's it. I am done with my expenses. So I'm going to select next, and it's going to show me what my summary looks like. So I had $25,000 in income. My cost of goods sold, which was the inventory and the information purchases, came out to $8,500. So it reduced my income by that. So now I have a gross profit of $16,500. From that gross profit, I'm going to start, those deductions are going to start coming off. So you can see that I have my regular operational expenses are the $9,370, my $1,800 meal expenses, my $2,469 of auto expenses. I had $780 in other expenses, and then I had $600 for my home office, which was the $5 per square foot. So that gives me a profit of $1,481. It did take us some time to get through the Schedule C, but that's because I'm talking a lot. If you have that profit and loss report, you have your income and expenses laid out, and you don't have me talking the whole time, it's really not going to take you that long to get through. So I'm just going to save that, and my self-employment income is done. So you can see now that's been added to my total income of $66,481. My refund has gone down a little bit because my income has increased, but my tax payments did not. So that's it. I've done my self-employed income, and we're just going to move on now and finish up our return. The next thing it wants to know is if I have any adjustments. Adjustments are going to reduce that gross income that we had dollar for dollar. So, and that will take us to our adjusted gross income. So if you did receive other forms that we talked about, maybe you paid student loan interest payments. Those are on a 1098E, I believe. Maybe you paid for self-employed health insurance. That is an adjustment. So make sure you have that information. The deductible part of self-employment, this is automatic. So if you have a self-employed profit, you're going to get this adjustment automatically. But any other IRA contributions, any other adjustments that you need to report, go ahead and do that. But for our purposes, we're just going to keep it at the deductible part of self-employment. And we'll see how much that is. So that's $105. So that brings my adjusted gross income down to $66,376. So now we're going to look at deductions. And, all through the Schedule C, we talked a lot about simplified or actual. Simplified or actual. Well, when we're looking at deductions, this is for your full return. This has nothing to do with your self-employment business. This is for you and your spouse, what you're reporting. And the IRS gives you two options. You can take the standard deduction, which is basically the simplified, and it is an amount based on your filing status, or you can list everything out that you want to deduct. Since they've increased the standard deduction amount per filing status, most people, the standard deduction is the way to go. They don't have enough in itemized deductions to make sense to do that. So your itemized deductions will be real estate taxes that you've paid, interest that you've paid, usually like on your mortgage, charitable donations, medical and dental expenses, but it would have to be a lot of those to be more than what you're going to get in your standard deduction. So I don't have enough itemized deductions to make sense to do that. So I'm going to select no, I do not have more than that. So I get the standard deduction of $25,900. That amount is going to reduce that adjusted gross income by $25,900 to give me what my taxable amount is. So I'm just going to go next. We're getting close to getting done. So this is the Schedule C was the hard part. So now we just need to finish this up. So now I need to select if I have any credits. Now you remember I did not add any dependents. So all of my dependent credits are grayed out. I can't take those because I did not enter any dependents. But if you do have dependents, make sure you enter those in because that's where you're going to get a lot of your credits. I made too much for the earned income credit. I didn't have any tuition or expenses or retirement savings, and I did not make any estimated tax payments for my self-employment income. Now, I'll say this real quick. I'm not going to spend a lot of time on it. If you have self-employment income, you are required to make quarterly estimated tax payments if you believe that you are going to owe taxes at the end of the year. You're probably thinking, how in the world would I know if I'm going to owe taxes at the end of the year? Well, you can look at what your taxes owed the previous year is one way to look at that. And then that's how you would calculate if you need to owe estimated taxes for the current year. But for us, I'm going to select that no credits apply to me. And I'll move on. If you do pay estimated taxes and you end up not owing that amount, you get that money back. The IRS does not keep that. So we are moving right along. Now we're in other taxes. So again, we're looking for any forms that I have. If I received insurance through the marketplace, I will have a 1095A that I need to complete. You may have received a 1095C. You don't need to enter that anywhere on your return. That's for insurance through your employer. But if you got insurance through the marketplace, then you need that 1095A because you're going to need to report that on your tax return. Even if you did not, you need to answer whether or not you had insurance through the marketplace. Several years ago, we had to answer whether or not we had insurance at all throughout the year. We don't have to answer that question anymore. And we're not getting penalized if we don't have insurance, but we do have to answer whether or not we had insurance through the marketplace because you could qualify for a premium tax credit or you may owe money back. So your return will reject if you had insurance through the marketplace and you did not enter information. So if you did, make sure you have that 1095A and you enter that in. Save that. So you can see here that I have a self-employment tax, and this is auto-calculated. This came from my Schedule C, and it's $209. Let's talk a little bit about self-employment taxes. When you are employed by an employer, you have FICA taxes. Those are your Social Security and your Medicare taxes. You pay half of it as the employee, and then your employer pays half of it. As part of, being your employer, they are responsible for half of those FICA taxes. If you're self-employed, no one is collecting that from you. No one is paying that from you or paying that for you. So you are responsible for paying that portion. And that's where the self-employment tax comes from. That's how to ensure that you are contributing to Social Security and Medicare as the employee and the employer. Now, that total percentage is 15.3% of your profits or of your net profits. So it can be pretty high, right? If you made quite a bit, that's a lot of money. Now that's where that adjustment came from. If you remember, we had an adjustment here of $105. So that is half of my self-employment tax. So we get that adjusted off the top. The government gives a little bit of break there where you can get that adjusted off the top. But there is a self-employment tax. If you have a profit, you're going to expect a self-employment tax, and that's just how it is. So we have 7.65% goes to, so if you were employed, you would only be paying 7.65% of your income, but as a self-employed individual, then it goes up to, you're paying double that because you're paying both employee and employer portion. But that's what the self-employment tax is. It's not a tax to penalize self-employed individuals. It's just to make sure you're contributing to Social Security and Medicare taxes. All right, moving on. And that's it. We have filed our taxes. We still have a refund. We're still doing good with $2,176. I have a summary so I can look and make sure I understand how the numbers are all working together. So I had earned income from my spouse of $65,000. I had my own self-employment income of $1,481. So we're just looking at after expenses. My adjustments were $105. That was my self-employed adjustment, bringing my adjusted gross income to $66,376. I took the standard deduction of $25,900, and because of my self-employment income, I also qualified for the qualified business income deduction, which is roughly 20% of your business profits. So my adjusted gross income is reduced by my deductions, bringing my taxable income down to $40,201. So my taxable income is quite a bit different than my adjusted gross income. So on that, I'm taxed $4,416. That's how much the IRS says I should have paid in taxes, plus my $209 of self-employment tax. So my tax owed is $4,625. Well, on that W-2, I reported, or my husband reported, that he paid in tax withholding $6,801. So that means we get the remainder of that back. So that is how we get to our $2,176 refund. So that is how we do those taxes. And I want to show you just a quick example of what happens if you have a loss. So I'm going to go real quick. We're not going to spend a lot of time on this, but I want to show you how losses will affect other income. If you had self-employment income and only had a loss, you had no other income to report, you would owe no tax on that. And if you didn't pay any tax, you wouldn't get a refund either, unless for whatever reason you had a refundable credit. Okay, so let's go to our expenses. I'm just going to increase my expenses some so I can show you what it would look like to have a loss. I think that should probably do it. Okay, so don't do that. Don't make up numbers. Make sure you're using real numbers. This is just an example. So now you can see I have a loss of $1,919. So I'm going to save that. And you can see now my total income is actually, my husband's income is reduced by that loss. So even if, you think, well, my business, I didn't bring in much income, which you need to report, but I ran at a loss, you still want to report that loss. You need to report that, and it can help you offset other income. So let me get out of here. So now I don't have any deduction, or I don't have an adjustment for self-employment because I don't have a profit. I only have a loss, so no adjustment there. So I'm going to select no adjustments apply. My standard deduction remains the same. No credits. I won't change anything else. But you can see on other taxes that self-employment tax is now gone because I did not have a profit. I had a loss. So there's no tax to be calculated when you have a loss for self-employment taxes. So now when you look at it, you can see that my adjusted gross income is reduced by my loss. I don't have the business deduction because I didn't have a profit, but I also don't have any other taxes. And my refund amount is actually increased because I did not owe those extra taxes on my self-employment income, and my total income was reduced by that loss. So that's how it looks when you are filing your self-employment taxes. I'm going to check for errors, make sure I didn't make any mistakes, and then I addressed everything. We're going to go through, everything's completed. Now I'm not going to go back and change those numbers because this is a sample return. So I talked about this in the last webinar, but I'm going to reiterate it. If it's at all possible, use a direct deposit for your check and not paper check. Otherwise, you're going to be waiting by the mailbox, making sure that came in. If you are self-employed and you tend to owe taxes every year, you can apply that refund to next year's taxes. So it'd be like an estimated tax payment that you've paid, and then you would report that on your next year's return. So you can apply any refund going forward. So that's what that is for. But for direct deposit, you're going to put your routing number in, account number, make sure you confirm your account number. You will need to make sure that your name is on the account. So if your name's not on the account, don't list it here. Your name needs to be on the account for direct deposit. One of the things, though, we learn, with the stimulus checks and the pandemic is if you can have your direct deposit on file with the IRS, that's good, because then if there is a opportunity for a stimulus payment or some type of refund, that money gets to you the quickest, and you're not having to wait by the mailbox. But I'm just going to select paper check just so we can move on. Now, if you have gotten through your return and you're just not feeling comfortable or confident in your numbers, you can always request that a second pair of eyes take a look at it. And we have professional, certified tax professionals who are sitting by ready and willing and happy to take a second look at your return. They will take a look and see if anything looks to maybe be a red flag or anything they want to address. Maybe they see an expense that maybe you might have left off, or maybe an expense that they think is that you shouldn't have taken. So you can do a professional second review if you get to the end and you're not feeling secure about your tax return, and have a professional take a look at it. If you get through or any part during this during this process and you feel that this is really outside of your scope, maybe you do need to take actual home office expenses. Maybe you do have depreciation rather. You have a lot of equipment that you need to depreciate. Maybe you want to take the actual vehicle expenses. Those may be opportunities that you think, you know what, I'm going to pass this off to the professional. I'm going to let them handle it. You can always switch to Go to Pro, and it's super simple. You upload your documents, you get assigned a tax professional, and then your tax return is prepared usually within 24 hours, as long as all the information is received. So you'll have someone else handle it. You just give us the information. We will prepare the return. We'll send it to you to review and make sure that we're taking all the deductions that you qualify for, and make sure we're not taking deductions that you should not be taking. So this is always an option that you can switch to Tax Pro Services, and we have tax professionals ready to take your return, prepare it, and get you the best outcome possible. So you can go straight from here and you can get started and enter your information. Or you can say, no, I got it. I feel good about my tax return. I feel very confident in getting that filed. So get out of here. Take me back to do it yourself. And then all that's left for me to do is to make the payment for my tax return, and then sign it and e-file it. So that's it. That is how you file your self-employment tax return. This did take a while, but that again is just because it's me talking throughout the process. When you have your information, you're doing it on your own. It really doesn't take that long. If you have, my takeaways here are, if you have your receipts, you have you know where that business expense came from. It's not personal, it is business, and you have that information. If you were ever to ask, where do these expenses come from, take that deduction. That's what they're there for. And so you can invest in your business and reinvest in your business. Otherwise, the government wouldn't allow you to take all those deductions. So that's why they're there. Don't be afraid to take your allowed deductions. If you have questions, reach out to a professional. That's what we're here for. And we're here to support you and make taxes as simple as possible, as quick as possible. Even if you don't want to do them yourself, we've got you covered there. So I am very excited that you joined me today. I hope that you learned something and you got some takeaways from this. Again, if there's other things that you would like to learn about or hear about, please drop us a message. Let us know what those are. And I hope that everybody has a great day and gets their taxes filed. Your deadline for your self-employment taxes is April 18th. And I look forward to our next webinar. Thanks.